What's up, guys? Welcome to 2025. It is a new year. We've had a crazy year in the markets. The S&P 500 is up over 23% on the year, and currently we are experiencing back-to-back years of over 25% gains. But data shows we are likely to have good opportunities in the coming years. You guys can see here that good years in the S&P 500 tend to cluster. Now, a lot of the times you can see that these are 2-year clusters that we have good performances, but sometimes we even have 3, 4, and 5-year clusters, which is super cool to see. Now, that doesn't mean that we're going to just blindly long everything in the market and think that everything is going to be fine and dandy, but it's good to use this type of data and this type of information to make assumptions as to where the market could potentially go. However, we do have to understand that there are some economic indicators that are pointing to possible recessions coming up this year or next year. And of course, there are tons of recessionary indicators that have been blown out of the water. Having fear in the markets is not a good thing, as they are designed to go up over time. We're going to be going over the S&P 500 and the NASDAQ and seeing where I think we are in the markets and what opportunities we could potentially have. I'm going to be going over some of these important recessionary indicators that we have to look at. And then I'm also going to be looking at some opportunities in the markets at the end of the video, including stocks that I've been adding in my Discord community that I see strong potential for in 2025 and beyond. And then we're also going to go over some hedges that I'm currently looking at to protect my portfolio in case we do have some potential downside in the second half of the year. So again, I'm going to make this super quick. Stick with me. Okay, so starting out with the S&P 500, you can see here in 2022, we had a massive down move. It was full of highs and lows, but we ultimately bottomed in October of 2022. And since then, we have had a massive rally on the S&P 500, 26%, I believe, in 2023, and over 23% in 2024. We've had a decent push to the downside here, and we're looking to fill this gap that we had after we found out the results of the 2024 elections. Now, we have filled a portion of this gap twice now, and we've had a bullish reaction. Where this goes from here is tough to know for sure. There is a possibility that we will come down and fill this entire daily gap before pushing higher on the S&P. We have very big stocks with large weights in the S&P 500 and the NASDAQ, like Tesla, that have had massive pushes. If you guys didn't know, we've been adding Tesla in the 180 to 220 range, and we have just been booking tons of profits on this. We have stocks like Nvidia, which have also been rallying like crazy over the year with the AI boom. Tons of accounts on X thinking that we are in an AI bubble, which I personally do not believe. However, that does not mean we're not going to have corrections at some point on some of these stocks. And although I do believe we're going to have tons of great opportunities to add companies over the next coming years, it is important to look at potential downsides. So when we talk about recessions, guys, there is a possibility that we will see a recession in 2025 or 2026. Nobody knows exactly when it's going to happen, but we do have to pay attention to some pretty important indicators, with two of the more important ones that I like to look at being the 10-year 2-year and the 10-year 3-month, which we're going to go over both of these right now. So for those of you guys that don't know, the 10-year treasury in history should be paying more than the 2-year. You're locking in your money for a longer period of time. So every time this chart uninverts, like we saw in 1990, like we saw in 2000, like we saw in 2007, a few months after this uninversion occurs, we tend to have recessions in the stock market with declines of 20% and above. That happened in the 90s, that happened in the 2000 dot-com bubble and the 2007 mortgage crisis. And now you can see we're uninverting the chart again now in 2025. So when this recession will begin, nobody knows, but this is a pretty strong indicator that determines whether or not it's going to happen. However, we also have to look at the 10-year 3-month, which kind of follows the same principle. Every time this uninverts, we tend to have a recession in the markets in the 90s, in the 2000s, and in 2007. Now, are we going to have a recession soon? Only time will tell. It could be years before it happens. It could be weeks. It could be months. Nobody knows. But keep in mind that these two charts are super important, the 10-year 2-year and the 10-year 3-month. So before we look at any stocks that we're looking to potentially buy for the long term, we have to pay attention to bonds. And one thing that I am personally adding to my portfolios that I have called in my community for a long time now is TLT. This tracks 20-year treasury bond prices. So these charts act inversely. When bond yields start to push down, bond prices go up. And when bond yields start to go up, bond prices go down. So over the last 4 years since COVID, when we lowered interest rates to 0 and we've been slowly raising them, we have seen bond prices start to plummet while bond yields are going up. And now that inflation is potentially starting to cool and the Fed is starting to cut interest rates, we are likely to see bond prices finally start to move higher again. Now, inflation seems to be sticky, as we see in the latest reports, inflation doesn't seem to be going down as much as the Fed anticipated, which is leading a lot of economists and analysts to speculate whether or not they are going to be cutting rates more than 3 times over 2025. So if you guys do believe that a recession is in the cards, which I'm telling you at one point or another is going to happen, so it makes sense to hedge your portfolio when things are on sale. If we look at TLT from a technical standpoint, we are trading into this monthly fair value gap, where I think that long-term investors are accumulating shares to potentially hit buy-side liquidity, which are these wicks up here at 100.57, 109.68, and eventually 120.69. Not to mention, TLT is also paying a approximate 4.3% dividend yield, which comes from the treasury bonds that they purchase underlying in the ETF, and that pays a total of $3.75 per share. So if you're looking for a potential hedge, you're obviously going to get a better dividend yield as this continues to drop. Now, going over to long-term positions, there are some excellent stocks that I'm personally looking to add, because if there is a discount on something that you love and it's too good to ignore, you might as well start to accumulate shares. Nike is one of those companies for me. We are currently trading at almost a 60% discount from all-time highs. And if you are to invest here, you are potentially looking at a 150% return on your investment if we were to hit all-time highs again on Nike. You have famous investors like Bill Ackman, who is famous for his Chipotle position, that has been buying this hand over fist. We have this trend line or low resistance liquidity that's forming on the monthly chart that I think eventually is going to fill. And not to mention, if you look at this stock on the daily chart, we have these 2 gaps that we still need to fill, one in the $90 range, one in the $84 range. The $84 gap has been filled on the hourly, which you can see here after earnings came in positively. Ultimately, I do think this daily gap is going to fill in the 90s, but we have to be patient. Do not expect to get overnight gains on a company like Nike, but I do believe that from a technical standpoint, we are oversold, and I think this is going to fill these gaps at some point in the future. Another stock that I personally have been looking to add is Occidental Petroleum. This is another one that me and the community have been adding, and we're actually up quite nicely on this so far. You can see here that the stock is trading into its 3-month fair value gap. One of its biggest long-term holders is Berkshire Hathaway. If you guys don't know who owns that fund, it is Warren Buffett, and you can very rarely go wrong adding companies that Warren Buffett adds for the long term. This is in heavy discount right now, and I think it's going to have a good opportunity to move to the upside over the coming years. I don't normally give away swing positions, but I think this one is a great opportunity that it's very difficult to ignore, and that is Disney. Whether or not you believe in the fundamentals of the company or the company's vision, that is besides the point. We are looking for swing trades here, and data is all that matters to me. We have a very obvious monthly buy-side liquidity here at $124.94. We've had a massive push on Disney, and we are currently trading back into this daily fair value gap you can see right here. I think this is going to be a good swing trade back up to buy side at 124. From this point, you're looking at a 12% return, which it should be pretty nice if this starts to push in the coming weeks, which I think it will. I have a few other very good swing trades that I'm looking at, but I'm going to keep those for the Discord. Obviously, I'm not going to reveal everything in this video, but one other thing I'm going to tell you guys about, which is very high risk and related to crypto, is the Bitcoin miners. Since our ads just last week, we are up a whopping 21%. You can see here in my Discord on December 30th, I mentioned that I was adding Riot while we were still trading into this daily gap that you see right here. I mentioned that we inverse an hourly fair value gap to the upside while we were going down on declining volume, which, if you guys don't know, is a signal that big money is accumulating shares. You can see here that we were moving down on Riot with declining volume, and we ended up having this massive wick on the daily chart. And since then, you can see that this week we've had a huge push on Riot. I still think this has a ton of room to run, potentially up to the $15 level, the $18 level, and the $20 level. So even now, there is still opportunity, though the risk to reward is not as good at this point. We have a super big week coming up in the stock market. I will be live day trading, streaming on YouTube. If you guys want to follow along, you are welcome to join those at 2 p.m. Eastern, at 8:30 a.m. on Wednesday, and 2 p.m. during the meeting minutes. I will also be live streaming on Friday morning at 8:30 Eastern. Don't miss out on live trading. By the way, I do that almost every single day. If you guys want access to all of my swing trades, all of my long-term investments, and all of my option selling, you guys are welcome to join the Discord. We are currently running a free 3-day trial. There will be a link in the description below. If you're watching this on any other platform, the link should be in my bio, or you can follow me on X, where I post daily content, daily advice, stock market tips. So I wish you guys the best, a good start to 2025, and let's crush it this year.